Hello, you're watching ET Markets Live. I'm Neha Vashisht. Welcome to a brand new episode of ET Smart Talk, where we talk all about equity markets, whether global or national. I'm here with Jigar S. Patel, Senior Manager, Equity Research at Anand Rathi, to talk more on this. Thank you so much, Jigar, for joining us today on ET Markets Live.
Yeah, thank you very much. Good afternoon, everyone.
So, Jigal, let's quickly get to the conversation. Let's talk about markets this week. The markets started off positively this week, but it was a short lived thing, at least till yesterday. And even today, we saw the markets are a little bit flattish only. So, from a chart perspective, is Nifty heading into trend continuation or a phase of consolidation can be expected this week?
In this technical front, since last 3 days, if we look at the Nifty, it is definitely trading above all major averages. But overall expectation is that consolidation may happen around 26,000 till 26,350. Even before that, if we talk about last week, we also saw. Consolidation around 25,700 till 26,000 odd levels, and later on we gave a breakout. So exactly the same thing which we are expecting as of now as well in next week also. So the major hurdle looks like 26,350, and the major support is 26,000 followed by 25,700. So in terms of weekly chart, 25,700 remains a very crucial support. Unless until it
Okay.
is taken out, we are in a bullish setup only. So overall, this consolidation is further expected, but overall we feel that buy dips can be adopted in Nifty with a stop loss of somewhere near 25,700, and all-time high will be the new targets.
Okay. Jigar, what are your thoughts on key moving averages right now? Is Nifty holding above its key moving averages? And what would invalidate the current technical setup as of now?
Definitely, as I just now said, that the Nifty is trading above all major averages, that is 20, 50, 100, as well as 200. So currently, at the level which I mentioned, 25,700, it aligns with 50-day exponential average. Also with
Hmm.
the major support of 8th of December 2025. And overall, still the angle of, if we look at the angle of 20, 50, even 100, the angle is sloping upward. So definitely the bias will be buy on dips only, and overall and gradually
Okay.
we will see all-time high in Nifty as well.
Okay. Technically speaking, what is happening when it comes to mid caps? Are mid caps showing relative strength or are there early signs of exhaustion? What is your take on mid caps right now?
If we talk about mid cap, since last 4 to 5 months, only since last 3 to 4 days, I am just seeing this mid cap performing. So definitely, I am
Hmm.
expecting that mid cap will continue and to perform well. Apart from this, Nifty is expected in consolidation, but overall Nifty mid cap, let's take 150 or 100 index. Even that particular index is trading above all moving averages. So currently it
Hmm.
has taken support near 22,000, recently 22,000, 22,100 odd levels, and currently trading way above that. So overall, the hurdle is somewhere near 22,500, but there are massive support near 22,000 and 22,100. So for next
Hmm.
1 to 2 months, I'm expecting at least 23,000, 23,200 odd levels in mid cap 150 as well.
Okay. So, do you think that mid caps are technically positioned right now to outperform large caps in the near term? What's your take on this?
Definitely, because if we take, say, for example, there are many mid-cap stocks which are turning around. Say, let's take an example of this railway counters, for example. Yesterday, we saw a very major surge from the bottom, and say again in RVNL, for example, we will take as RVNL as an example. That it was seen that multiple bottoms was seen somewhere near 300, 305 odd zone, and since last 3 days, there has been a tremendous traction seen of approximately 40 to 50 points in RBNL. And you take any name, Ircon, Rights, BML, we saw very good traction. So I
Hmm.
feel that in terms of mid cap, this railway counters will be in focus till this first week of Feb because budget is there and already the rally has been started.
All right. Before we close, let's also talk about sectoral charts. Which sectoral charts do you think are showing clear breakouts or strong continuation patterns right now, and which sectors look technically weak right now?
See, let's start with the Nifty IT first. See, in Nifty IT, the major shift or the major reversal, it has already, we have seen from the month of September or maybe the start of November as well. But the thing is that we have seen one-sided rally from this 33,400 till almost 39,500 soon, which comes close to 5 to 6,000 points. So there may be a chance that we might see some temporary pause in IT, but overall IT looks well and well positioned for 2026. And we feel that the major support will be 37,500 in IT, and the bias will be bullish, and buy on dips will be only considered in this Nifty IT. And second, first, I think Nifty metals. Let's take Nifty metals. Nifty metals again. This has been a very strong pattern on weekly chart as well. The all-time high, which was resisted on September 2024, it has been taken out, and multiple times we have tested this level. Provided the rally which has been seen since last 3 to 4 weeks. So I feel that metals are a bit extended. Say for example, in zinc, in copper. So we might see some temporary pullback in this both counters, but overall the bias remains bullish in Nifty metal as well. And the this FMCG sector. Let's talk about FMCG
Okay.
sector. FMCG sector continuously it has been consolidating in a zone of 54,000 till 57,000, approximately 3,000 point zone. So overall we expect that in 2026 this index will perform well, and the major stock in this are ITC. ITC can be kept on radar for at least 450, 460 odd levels. The next stock is Nestle India. We are bullish on this particular in this stock as well, because there has been a breakout near 1200 mark, and we are expecting at least 14 to 1500 levels by 2026 in Nestle as well.
Okay. And what's your take on PSU and railway stocks right now and for the near term?
For railway again, the outlook will be positive because the kind of structure we have seen in many stocks, say for example, Ircon. Let's take example of Ircon. Overall, the structure is bullish, but the what is a positive point in this particular counter or any other railway counters? We have already seen a correction of 60 to 62 percentage from the top of
Yeah.
July 2024, and on weekly chart the 200 exponential period average has seen multiple bottoms near 150, 140 levels, and there has been a double bottom with divergence at this 160, 170 zone, and we have seen a small trendline breakout also in Ircon. So overall, the railway counters are positioned well for next 3 to 4 months.
Okay. Before we close, Jigar, one more thing. Apart from traders, what is your suggestion to investors who are looking to invest for short to medium term, and also from medium to long term? Which sectors they should look out for in the next year?
See, first of all, in terms of sector, for medium term, again, railway will be on spotlight for next 2 to 3 months. Now,
Hmm.
specifically, if I talk about stock, okay, Coal India has seen a major shift in its price action. If we
Hmm.
talk about weekly chart, there has been a massive consolidation right from March 2025 till yesterday. Yeah, I think yesterday it gave a breakout and it has been sustaining about the breakout zone of 395. So there has been a major range shift. So I would suggest investors or a trader to look into this Coal India and keep a target of around 460, 470 for this entire 2026, coming 2026, and keep a stop
Okay.
loss of below 370 on daily closing basis. So this is first counter which has to be kept in on radar, and second is trend. Trent has also seen a tremendous beating from the top of 8,300. So again, the support is seen near 200 period exponential average on weekly chart. So the target, what we are expecting by 2026 is again 6,700, 6,600 levels in trend, and the stop loss would be placed below 3,400 on daily closing basis.
All right. And any sectors that people can avoid for now?
See, avoiding would be first of all, again, as discussed, metals would be a kind of red flag as of now because
Hmm.
the metal rally is only driving from this silver gold rally. So
Yeah.
what we are feeling that say, let's take example of Hind copper once again. There has been a tremendous rally right from 228 till 430, and it comes to almost 92 percentage of rally since September 2025 in Hind copper. If you look at the chart, right from September till now, the rally has been almost 92 percentage in terms of points. 210 are the gain points from the bottom of 228. So there is a lot of reversion to mean possibility in Hind copper as well as Hind. So I would suggest try to book profit and avoid making new positions at current levels.
All right. Jigar, this marks the end of our segment for today. Thank you so much for joining us today on ET Markets Live. It was a pleasure talking to you.
Same to you, Neha. Bye.
Thank you so much. Thank you, everyone, for joining us.